Hello, and welcome to the market update for Tuesday, July the 19th. As always, if you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. Let's go ahead and get started. A big whipsaw reversal from yesterday to today. We'll look at it when we take a look at the charts, but it looked like we were going to make another move down to the lows of that sideways range that we've been in for the last little bit. But we could be breaking out with today's move. We'll see how things close today. But that kind of whipsawed me out of a few option trades today, which I wasn't too happy about. But I knew it could happen just because the way the market had been behaving, it was setting up for some sort of a head fake of some sort, but you kind of have to trade what you're seeing at the time. So anyway, again, these long-term or these direction alerts, not much has changed yet again, and we'll talk more about them when they're showing some more significance. And part of the reason why they're not showing any significance is because we've just been moving sideways, so we're not getting stretched in either direction. That if we do break out here and start rallying for a few days, if that's the direction we're going to move in, we should start to these indicators will start to become more relevant. But long term, we're still in a bear market. So again, any rally that you get, you have to you don't say you have to, but you likely assume it's just a rally within the downtrend, and until it starts acting more like an uptrend. And it's these little clues that I keep talking about each week, and hopefully you're learning them. Clues to look for that could indicate that maybe the rally has a little bit more to it. I keep coming back to the fact that I still think we need this panic sell-off before we put in a significant bottom, but it doesn't mean that we couldn't rally up for a week or two even to alleviate the bearish sentiment. Because although the market hasn't had that panic sell-off, there are a lot of people that are pretty bearish on the market. And so again, when the crowd gets a little bit too far to one side, it makes it very hard for the market to keep declining when no one's really buying because they believe we could go lower. I think in order to get that panic sell-off, we're going to need some hope that comes back in that everything's done or we're over, and people start being confident about buying again, and then it's going to probably reverse, and that's when I think we'll see the panic selling at that point. But unfortunately, but it doesn't mean we can't. If we do rally for a few, it doesn't mean we can't participate in that. If it does want to do that, and we'll take a look at some potential trades to add to the portfolio if we do indeed break out. If it looks like we're going to break out of this range. The momentum indicators you can see right in the middle, not really giving us an indication of overbought or oversold. What it tells us is we could trend up or down from this area. We could trend up and become overbought, get into this extreme overbought range, or we could trend down and get into this oversold range, but it's not really helping us as far as the direction. And these usually don't. They're usually indicators of extremes, when we get too far to one side. Sorry, I get really bad allergies, and it goes in stages. There's certain things, obviously, that come into bloom during the spring to fall, and one of these days I'll pinpoint what it is, find out exactly what I'm allergic to. But I was okay. I got hit pretty hard. If you remember some of the updates earlier in the spring, I was hit pretty hard with some allergies. You might have heard me have to cough and clear my voice a lot of times in the update. Well, something else is kicking in right now that's really gonna have effect on my voice a little bit, but we'll get through it. So momentum, breadth, same thing. Although breadth it got a little bit into near this extreme range, a little bit oversold, but not enough to where we still couldn't have moved down or moved lower. we'll keep an eye on that, though. It'll probably end up trending this way if we start rallying. We might, but that's something to look for. Are we starting to see more stocks participate in the rally, or is it just a handful of stocks that are causing the rally? We'll keep an eye on that. Sentiment again still remains high, and this is another reason why I don't think we're near a bottom. We haven't gotten even close to this just the minimum fear, not even talking about extreme, but not even into the fear, barely into the trending area. So market is just too complacent. They're just not, although it was bearish, they're just not worried about the market just wasn't worried about any big sell-off taking place greater than where we're at, and that's kind of why we've kind of moved sideways. That'll happen a lot of times when we start moving sideways. That's what's going on there. The buy-sell ratios come closer together here. So what could happen here if we rally is we could see the new buys start to take off and a lot of sells going to holds, which could move this down. But again, this is just telling us that we could trend either up or down. We could even trend down, and you can see this turn right back up, and sells go up and buys go down. But again, we're not in any sort of extreme range here. And same with the sentiment. This sentiment indicator, we're right in the middle between the overbought range up here, oversold range down here. So let's move into the charts where we really want to spend our time today. And this is the area here that we're kind of watching, and it goes even further back into some previous support resistance back several months before as well. But right here, support, rallied up here for resistance, rallied up here for resistance. And you can see what happened yesterday. We opened right at this area, closed down here. It looked to me like we were going to work our way back down to this lower part of the range. I wasn't necessarily looking at that as the start of a bigger move down. I just didn't have the feel of that yet. But I thought maybe we could be stuck in the sideways range for a little bit. I think I talked about this on Thursday, even in the update. To remember, I can't remember if I did or not, but I think I mentioned that it's possible that we still stay sideways for a little while, and that's still the case. It still could be possible. It looks like we're kind of breaking out right here, but we're not. It's not a clear break yet, and you have intraday moves that were up a little bit higher than that, even back in here. Could we fade a little bit into the close and look a little bit less decisive? That's possible. Typically, though, when you have a reversal like this where it goes from bearish right to bullish and you look like you're going to break out, you end up breaking out a lot of times. If that was going to be hard resistance, you should see more sellers today to bring it down. Now, this still fits into what I was talking about over the last couple of weeks, where I thought maybe this was wave A, this was wave B right here, and that this could be wave C that maybe puts us up around that 400 level. And then we get another drop. So that 400 level comes from this area right here where we gap down and fill in that gap right there. We've already kind of filled in this gap down right here, and that this one was part of that where we're at right now. And so now, again, that would be more of the bearish narrative, meaning maybe we rally for a couple more days, or maybe one big day where it really looks like it's taken off, and then you get a bearish reversal. So once we get up to around this $400 level, I'll be looking to see if we have another bearish reversal day that could indicate that maybe we move lower. Now, I told you I might add a couple of trades today, and the reason for that is if we do break out right here, there's a very high probability we move up. And if we get a bearish reversal candle and get stopped out, no big deal. But there's a chance too, because so many people are bearish, there's a chance too that we get a really sharp, and this area, everyone's looking at this area right now. So I'm not giving you private information that nobody is seeing right here, I'm not saying nobody else in the world is seeing this right here, and we could be breaking out of that. Everybody that's a technical trader knows anything about reading a chart is looking at that area right there, and that's part of the reason why we kind of been stuck and we haven't been able to get above it. Is because it's almost like everyone's waiting. Well, the technicians are waiting for somebody else to push it out above there. We're waiting for the price to actually break out above there before we're going to jump in. And but when it does, what could happen is because a lot of the short sellers have been using this area to short the market. They shorted right here pretty heavily. They shorted here. I think they shorted. Well, they did short yesterday because that's what kind of created that bearish reversal candle. They're getting squeezed a little bit right here, having to get out of their trades. And a lot of this rally up, as soon as we got above to yesterday's high, a lot of that was due to short covering, people that had shorted right there again this area, having to cover. Some of them might be waiting to see if it still holds here and reverses. But if it breaks out, there's going to be a big short squeeze. And a lot of that initial buying is going to be those bearish traders getting out of those short positions. And, they're going to be jumping out and it's going to cause this to really spike up, rally pretty quick. And that could last because if that could last a few days. And usually what's a characteristic of that is when you have a really big update. We might have a big 1,000-point rally in the Dow or something like that. Really gets everyone's attention. And then what happens then is that you get a big move like that, and you get all these people that have been waiting around, just like you. I've gotten a few emails. I know a lot of you are saying, especially usually it's newer people that are just joining in. They're excited to get started, and they look at the portfolio, and there's one stock in there, and then there's this SARK that they have no idea what that is, and they're like, well, wait, why aren't we doing anything? And they've been, everyone's waiting. They want it. They don't want their money just sitting there. And so they start jumping in and buying, and it can fuel a rally for several days and maybe even a week or two. So that's possible that could happen. And if that happens, then we want to have something in there that we are able to be able to participate in that if that happens. And you'll start to get that fear of missing out, that FOMO that everyone talks about, basic human nature, and because again, it's important you understand this stuff because it's what fuels the selling. It's what fuels the panic. When we talk about panic selling, panic selling comes because you didn't really have a plan, or the move has caught you so off guard that even if you had a plan, you don't know what to do about the plan. Do you execute it? Do you go ahead and get out, or do you stay in? Or, I thought for sure we were done. We're bottoming out. You start to question your plan, and it causes chaos. And that's what. Now, how do you get to that point? Well, a lot of times, to use the panic or the fear of missing out example, this thing starts rallying, and right up in here, you're like, oh man, I'm missing it. You start getting in, and you may not even have much of a plan. You just don't want to miss any more of the move. You've seen how far it's gone, and you're like, if this is the bottom, if this is it down here, this is what I've been waiting for several weeks now. I don't want to miss it. And so you get in, and suddenly it rips back down sharply, and now you're like, oh crap, we're not done yet. And I thought for sure we were just going to go higher, so I didn't bother having a plan, or if I did have a plan, it was just a basic plan. I wasn't really thinking I was going to have to stop out. And then you start panicking as it starts dropping, and then that's what creates that, because it could be even a bigger move down. You can have a big rally with people chasing the rally, and then an even bigger move down when they panic sell. I call this panic buying, by the way. I know it's a weird term. You don't usually associate panic with buying, but it is when I say panic buying, I'm talking about buying that's based off of that fear of missing out. And by the way, it's not just retail traders that do this. They're big institutional traders. These people get their bonuses and everything are based on performance. They've been sitting here with the market moving sideways. We're halfway through the year. they're just having a terrible year. The whole year we've been down, and now we've been moving sideways. And if we start rallying, they're like, I've got to have some gains in order to get my bonus at the end of the year. And they're going to be falling victim to that fear of missing out. So we're going to watch for that. Again, it could be early. I'm just pointing this out right here. We've already kind of gone through a couple scenarios here where, at this 400 level, we're going to keep an eye on. Now, why am I picking 400? I talked about this before, but there might be some new people in here. When you have an ABC pattern, very often the ABC pattern will end when wave C is about the same length as wave A. So this distance of the move, I'm calling this wave A, this wave B, and if this is wave C, that would be about where that would be about the same length, and it's a round number too. And remember, it's also where we would fill in that gap. There's a couple of reasons why I'm picking this area, but this is just, again, I'm not saying that we have to get here in reverse. I'm not saying we have to stop here at all. I'm just saying this is a target area that we're going to look at. Do we get some sort of bearish reversal? It doesn't have to be at 400. What if it's at 398 and we get a big bearish reversal candle? All right, we're close enough to that area, and we were looking at a possible bearish reversal in that area that could maybe signal another move down. Again, we'll talk about that if we see that here in the next couple days, or even either Thursday's update or next Tuesday's update. I'll comment on it if I see it. But so that's kind of what we're looking at for now. There's a lot of earnings that are going to be coming out, and especially next week. Now, if you're trying to determine, well, are earnings going to rally the market or crash the market? What if earnings are, everyone's talking about earnings disappointment. We should start seeing revisions downward on forecasts and things like that. Try to predict earnings. I've talked about this a number of times. That's why I don't like to trade a stock before earnings, because it can go either direction. There's really no way to predict. Even with the chart pattern, you could have a bullish chart pattern, and then they come out with great earnings, and the stock could be down 20% the next day because of something that somebody focused on and decided to sell was the reason to sell, and so it's just too unpredictable. But you just need to be aware that there is a lot of fuel that can move this market for the next little bit. Earnings can, again, make it go up or go down. I think if we break out of this area here, it's more likely that the market will probably shake off some of any negative news and still possibly rally off of that. We also have a Fed meeting at the end of the month, the 27th. That's a Wednesday, and that could have an effect on how the market moves as well, or so maybe we rally into that Fed meeting, and who knows, maybe we sell off after that. I don't know. I'm just pointing out possible catalysts that could move the market up or down, and we're definitely in a month where we could get a lot of those catalysts. All right, the other indexes, again, most of these are about the same. They're seeing pretty much the same chart here. So believe me, we will spend some time on these different indexes when they're, particularly if they're moving in a different fashion. But for the most part, they're making kind of the same moves. And so we're not. I don't want to just start going over these charts and repeating what I just talked about on the S&P, but it's the same thing. And you would likely see these react in the same areas, meaning that, look at the Russell 2000 right here. If this is wave A, wave B, wave C, then maybe up around this 182 area, you might, there's a gap right there, 182, 183 is where it might find some resistance. I don't know, possibly, but it's pretty much kind of the same analysis. So that's why we're kind of skipping through those. Bond market. Bonds have been moving sideways here. We thought that, a couple weeks ago or a week or so ago, we had this drop. We're looking at this as a bearish ABC pattern, had a sharp drop right here, a little bit of a counter trend move, and then a bearish reversal candle. I thought for sure it was going to head down. Then we had a bullish reversal day the next day, and then since then we've just been sideways. In fact, we've been contained within that candle. Look at that. I mean, we've had 4 straight trading days where we're just within this candle right here. So the bond market is trying to figure all this out, what it thinks could happen. What I would do here is I would mark this high right here and this low right here. Now, if it breaks above here, it's not necessarily overly. I wouldn't be overly confident that the bond market is reversing its downtrend and going into an uptrend. It would need to get above this high right here. This is the previous lower high after this lower low took place. So that would be the high you'd have to get above in order to be the first possible signal of a trend reversal. And again, these would still be early stages, but you'd like to see more of an impulsive move up too, where it starts really moving sharply to the upside instead of more choppy. We've been more choppy, more sideways here, more indecisive. But I think a move down below here, we're going to head down to these lows and possibly go lower than that. So a move below here would be bearish. A move above here would be more bullish, but more bullish in the sense that it should at least get back. If it breaks above here, it should get up and test this high. We'll have to see if it breaks above it at that point. It could get up to that high and then reverse and have a bigger move down, but that would be a little bit more bullish in the near term if it can break above that. And then really kind of watch. I think how it breaks outside of this candle right here is, we had 4 days where we've been within that candle. If it breaks below it, that would be lean a little bit more bearish. But it's indecisive right now, so we don't want to draw any strong conclusions with the bonds right now. We're not trying to. The overall trend is still considered down, so that's the general trend. And remember, the reason why that's important is that stocks will tend to, they're more likely to move in the direction they've been moving in. The path of least resistance is what we call it. So we're still technically in a downtrend, so the easier move for bonds is still to the downside. What we're just focusing on right here are there any signals that could be warning that could be changing? The biggest one would have to be this high up here, and that's really the one that we're going to keep focusing on. It will break to a higher high right here. We want to pay attention. We could be in a possible trend reversal at that point, but we're acting really indecisive right here with the sideways move. The trend is still considered down, and so we're not going to try to. We want to be prepared. What I'm doing right here is looking at possible scenarios. If we break out above here, if we break down below here, what does it mean? But we're going to let it do what it's going to do. We're not trying to predict or be psychic here or anything like that. We're just trying to be prepared and be aware of what that could be signaling if we break above or below these key areas. All right. Gold. The gold continues to move lower. We talked about this last week, that gold was in this kind of extreme reversal risk area right here. And again, I said that doesn't mean it's going to rally out of that. It could rally as a part of a correction. It could just move sideways to alleviate some of that oversold condition. And that's kind of what it's done. It's kind of moved sideways the last 4 trading days, alleviated that oversold condition a little bit. The trend is still down. We're going to assume that trend is going to continue lower until we see any evidence that, I'd look for maybe a sharp rally, a pretty significant rally over several days that could indicate a possible trend change there. But trend is still considered down there for gold. Oil looks like it could be starting to trend back up. Now, we talked about this a couple of weeks ago, where I looked at this as a possible bullish ABC pattern. Not a lot of conviction in these up days right here, so I didn't really get into any oil trades, and that was good because it came back down. Got a bullish reversal candle here, and today's actually a pretty solid candle. In fact, I'm going to consider jumping back in the USO trade because I think it's possible that oil could rally, and a lot of that too is tied into what the dollar's been doing. We'll look at that chart here in just a second, and I'll explain the reason why the dollar move could be significant for oil. For those of you that might be a little bit new, some of you that have been with me for a while, you know the correlation that we typically look at there. So here's the dollar chart. Dollar has been trending up very strongly. In fact, that's what the market is really talking a lot about recently, is a strong dollar. Now, in this context, a strong dollar is actually not good for the market. Well, for the market and for the economy, for that matter. It's going to have an impact on earnings. You're seeing a lot of companies revise some of their numbers downward. And the reason they're saying they're revising some of their numbers for the next quarter downward is because of the strength of the dollar, particularly those stocks that do a lot of business overseas. It's going to hurt them a little bit. Now, if you remember last Thursday, we talked about that we saw the dollar was getting extreme. It was in the extreme reversal risk. This is where you use these indicators here. It was telling you it was stretched. It was over. It had gone up too far too fast. Doesn't mean it has to come down. It could move sideways. We saw that with the opposite of that with gold. But we said we should alleviate this. We should correct this move here pretty soon. We should start to see a correction of some sort, and we did. We saw it very quickly. It dropped very quickly here. Now, the reason why the move over the last few days is, to me, it's significant is because it's possible that maybe we're seeing a trend reversal in the dollar. At least it could just be part of a larger correction it goes into, but this goes back to just the general trend characteristics. Stocks tend to alternate between impulsive and corrective moves. When they're in an uptrend, you get impulsive, corrective, impulsive, corrective. And when you change direction, very often what signals a trend, not always, but one of the things you look for is, do you get back-to-back impulsive moves in the opposite direction? In the case of reversing from an uptrend into a downtrend, you get an impulsive move up followed by an impulsive move down. And that's what we've seen right here. We have this impulsive move up, and we got this impulsive move down. Now, what I'd be looking for is, if it does try to rally, do we see it rally, but does it start to move a little bit choppy as it tries to rally? Because that's exactly what you would see in a trend reversal. Impulsive, corrective, impulsive, corrective, impulsive up, impulsive down, and then it reverses. Now you have corrective, impulsive down, corrective, impulsive down. And when you get a bottom, you get impulsive down followed by impulsive up. Again, this is not exactly how it plays out, but this is the general characteristics of trend behavior. You got to know this stuff. Because it doesn't play out exactly this way, you got to be able to kind of see some of the little subtle clues. All we know right now is that we have this impulsive looking move down. Now, the market will trick you. Sometimes we've seen it happen where you get an impulsive move down, then it goes right back up again. That was the correction. It didn't look very choppy or sideways, but that was the correction. That could possibly happen. And so really, we're not going to know, we're not going to have a better idea of this until we see the first corrective move. If it starts moving sideways right here, then I would say it probably has at least another move down. Now, that could just be a large ABC pattern. It could have another move down, and then this could be correcting this move up right here, and then it takes off again. I'm not saying that I think that the dollar move is done, but it could be that it might be that we're in this larger correction. We could see the dollar come down a little bit further. Now, why is that significant to oil? Well, oil and the dollar tend to move inversely, move in the opposite direction. Not always. As with many of these correlations that you hear about, they're not exact, and they don't, you don't want to assume that it's all the time. But they do a good portion of the time they do. And there are a number of factors that can cause oil to go up. But a weaker dollar is one of those things that can help it rally. Now, it can also help other commodities like corn and wheat and gold and silver. Okay, these are all commodities, and commodities and the dollar tend to move inversely. So maybe a weakening dollar would cause gold to rally a little bit. But it's kind of surprising that gold's still moving sideways, even though we've had this significant drop in the dollar. That tells me there's a lot of weakness in gold right now. I wouldn't touch it, and I wouldn't short it because it's down so far that it's not in a good place to short gold. I kind of just stay away from it. But I'm gonna go ahead and get into an oil trade in case this continues, in case the dollar is in a little bit bigger correction, and we could see oil rally a little bit from here, maybe get back close to those highs again. Now, again, this is not great news for those of you that have been waiting for lower gas prices, and I wouldn't be too upset if I'm wrong on this trade and have to stop out, because that could mean I'll make up for it because I'll pay less money at the gas pump. But I like that trade right now based off of what I'm seeing on the dollar, and more of that impulsive move down on the dollar. And that could change, and it could change quickly, and we could be in Thursday's class and I might be getting out. By the way, a lot of trades right now in the portfolio could be very short term, just because when you're in a whipsawing market condition, that's what happens. You're jumping in and out of things, and the other choice is to just sit it all out and not do anything. But this is why I don't like choppy markets, is because, and I say this all the time, but it's true. Anyone that is traded for a long time, you know exactly what I'm talking about. In a non-trending environment, and by that I mean it's moving more sideways, you're up for a few days and then down for a few days and up for a few days, you typically end up working twice as hard for half as much money. And your choices are usually, I don't have to work at all and I won't make any money, or I'm going to work twice as hard, I'm going to make half as much money, and that's going to be it. If you're expecting big returns and making big bucks, that's just not the environment where you're going to get it. 2 years ago, we were coming out of COVID. We had all that COVID stimulus, and we had all this COVID stimulus, and we had all these small cap stocks that were just taking off. These were companies I'd never heard of, left and right. There were new companies I'd never heard of every day that were just going from $5 to $10 or $12. I mean, they were just making these unbelievable moves. And I was taking advantage of it in the option market, and I was working with a client and helped him turn I believe it was it was $100,000 or $300,000 account to $3.3 million in about what was it, 9 or 10 months or something like that. And people heard that story or heard those results were like, man, help me out. I want to do that. And I'm like, well, we're not that type of market. We're not in that type of market right now. Right now, I'm working twice as hard for half as much money and just trying to make some money in that grind. And like I said, the other choice is just to sit out and wait until, we start trending. And I don't care which direction we're trending. Now, in this class, we're looking for bull markets. We're looking for the market to bottom and start having this longer uptrend. And so we're going to make more money when we're trending up. But when we're trending, that's when you can make bigger returns. So just be aware of that. Let me go back to the S&P chart here because you can see it visually. Look what we've been in the last month right here. Even when we had this trend down, but before that, we were about a month where we were again moving pretty much sideways. But that's why if we break out of here, we might get a few days. I mean, even here we got, we had 4 or 5 days we moved up right there, but barely. We didn't go very far. 4 or 5 days we moved down, but we didn't go. We were stuck in this range. Today's a pretty decent upward day. If we can break out and have a couple more of those, then we could see some pretty decent returns. So that's why I'm going to add a couple things to the portfolio today, but in case we do. But we could whipsaw right back down and get stopped out, and it's just they're frustrating. It's frustrating, but you have to accept it because we can't control the conditions. But if you recognize, okay, we're moving sideways right now, a lot of times what I used to do is when I'd recognize these conditions, that's when I would plan my vacations. I never want to take vacations when the market's trending because that's when you're making all your money. But when it started to look sideways, and obviously you don't know you're moving sideways. It took until right about here where we reversed back down, where I'm like, oh, we're moving sideways. We're in a sideways range here. But that's when I go on vacation. It's like, this is a perfect time to take a vacation, so I'm not, working twice as hard for half as much money. But anyway, just be aware of that. That's important to understand because you can want whatever you want. But you might not be in the market condition to give you what you want, and you want to be able to recognize when you are. This client of mine, as soon as that stimulus hit, and he knew market was down, it got crashed down when COVID came out. The Fed is going to flood the market with money. Everyone's going to get these stimulus checks. Where are they going to put it? They're going to buy stocks if they don't need it for anything else. They're going to speculate. And he called me up and said, let's do it. And because he recognized that's the ideal condition to take advantage of that. And he's a client that he does that about whenever we have these big spurts every few years. It's like, we'll get mini ones from time to time, but he has other things he does. So he just waits until he sees those conditions, and that's when he wants to be in the market and really get the most out of the market is in those conditions. He hates these conditions. He won't even take my call right now. He's so busy with other things. Doesn't want anything to do with this market. But it's important you recognize those conditions. Okay. Sorry, I didn't mean to spend that much time on that, but I do it. I'm explaining this to make sure we temper expectations, especially for those of you that are brand new. You're jumping into this. You're like, all right, I'm ready to make money. We will. As I keep saying, we're getting very close to a major bottom. And when that bottom hits, and we're going to be loading up and doing very well, riding the trend back up because we were so patient on the decline. We didn't get our account crushed on the way down. We're going to really be able to build it on the way back up when it finally moves back up again. The VIX, this is another thing that really threw me yesterday or Friday, yesterday and today. So Friday, I turned pretty bullish because we had a decent market rally. Let's look at what happened on Friday. Let's go back to the SPY chart here real quick. So we had this move up on Friday. We had gapped up at the open, and then we faded a little bit, and we closed near the highs of the day on Friday. Not a huge move up, but it was a decent move up. But if you look what happened on the VIX came way down. Now, there's two main things that I'm looking for in the VIX. I'm looking for if the VIX and the market are moving in the same direction. Always pay attention when that happens because they should be moving inversely. And if there's a proportional move that's significantly different. In this case, it was a proportional move. Yes, the market moved up, so the VIX should move down, but it was a huge move down on the VIX compared to the move up on the S&P. It broke to a lower low right here, and I thought, man, this is very bullish. This is telling me those professional traders are really believing the market could rally right here. And then yesterday, we bump up against that resistance, and we have a bullish candle on the VIX, a big bullish reversal candle on the VIX. And so I'm seeing that saying, oh, wait a second here. Now there's concern again, right? And we're getting a strong bearish reversal right at this resistance area. That may be more bearish. And then and what was happening this day here was we had the market was up and the VIX was up. And I'm talking earlier in the day. Obviously, we came down here, but earlier in the day, when I was looking at the market was up, and the VIX was up yesterday. And I'm like, okay, that's more bearish. They shouldn't be moving the same direction. What does that mean when the VIX is up and the market's up? That's telling me that they're buying protective puts. That's what's causing the VIX to be up. Why are they buying protective puts if the market's up? Well, what they're doing is they're buying some stocks, but they're also buying protection because they don't trust the rally. And when that's happening right at a significant resistance area, that's pretty bearish. That's why I was pretty confident we were going to get some move down. I thought for sure we were going to come down to this, at least this lower part of the range. But then it whipsawed again. We're up today. Now we're up today, and the VIX is down, which is a normal relationship. And the VIX isn't down in any major different. Let me pull up the VIX again here. The VIX isn't down in any huge proportional way. That's about the here's where we closed yesterday. We're down here. That's about the same move as the S&P is up. So it's not really telling us anything today, but that's one thing I would look for. We've got a little bit of support right here. We're at a resistance area on the S&P. Do we see the VIX break down below here with the move? If the move goes up above that resistance area, if that's the case, then the VIX is telling you that would be more bullish to see from the VIX. If tomorrow we see the S&P rally and break out even, but we see the VIX move up as well, that would tell me I don't trust the breakout. That could be a false breakout. And it doesn't mean I can't buy it, but I wouldn't be aggressive buying it because that could change. Notice how this has changed day to day, where we've seen some of these strong signals and they've reversed. But I wouldn't be going, we're breaking out here, I'm going all in. If I see a day where the market's up, breaking out, and the VIX is up a little bit too, that would tell me those professionals aren't quite trusting the breakout. Chip stocks. Again, they had just another reason why I was bearish yesterday. Again, right here, here's a key support resistance area right here. I'm not drawing straight lines, sorry. We gapped up to it yesterday, had this bearish reversal candle. Again, I thought we were going to work our way back down. Now, chip stocks have broken out above this area. They tend to be a leading indicator. So does this mean that the S&P and the NASDAQ should follow? Now, typically we're looking at the chip stocks and the QQQ. So let's take a look at the QQQ chart. Is it breaking out as well? Or if not, it could be this breakout in chips could be a signal that it's about to fall. So it's barely kind of breaking out of its range right here. Obviously, the SMH is clearly breaking out. So maybe that's a good bullish signal that we'll see the rest of or at least the NASDAQ 100 should follow that. I think that's a very bullish signal today that the SMH is clearly breaking out. Now, again, I'm saying clearly, but a lot could happen in the last hour. What if we fade all the way back down again? I don't think it's going to happen. It's held, but we haven't seen much whipsawing all day. It's been pretty steady. The rally, the gains have been kind of steadily moving higher. So I don't think we're going to fade much into the close, but we do have to keep an eye on that. That candle could look different at the very end of the day. Transports, again, kind of a leading indicator, although they're right at this area right here. Not a clear breakout, a little bit of a breakout there. Keep an eye on that. Remember, these aren't telling you something every day. We go through and look at them, but that's what I'm looking for. Is do we see little leading clues like we did on the chip stocks? Are they showing a little bit of a leading uh, possible move. Now, I'm not going to base my entire trade off of something like that. That's only one part of the process. Notice how all this analysis that we're doing involves almost an hour here where we're looking at all these different things. We're not trying to look at one thing to tell us what we think is going to happen. We're analyzing all the stuff to know the conditions we're in before we start getting into trades. And basically my conclusion at this point is that we could be breaking out, Bitcoin's having a pretty good move up. It was in the sideways range. Now, again, this could still just be part of the correction. Sometimes in these sideways ranges, remember I told you how a lot of times you see the sideways range, there's a very high probability that you're going to break out and go higher. Whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. Remember what I also told you about this is sometimes you'll get a little bit of a head fake out of that move. You're in the sideways range, and it's because there's indecision between the buyers and sellers. The buyers aren't confident to buy, the sellers aren't confident to short. And sometimes what will happen here is you'll get a dip down out of that range, and then it'll take off. That dip down is what the buyers are waiting for. That's the deal. That's the sale price they were looking for. Now they're aggressive buyers and they push it higher. Well, the opposite can happen in a downtrend. You get this move down. We've been moving sideways. Maybe what those short sellers have been waiting for is a move up into here before they're going to start shorting Bitcoin again and drive it down. Now, I don't know. You also have in downtrends, you can also have these sideways move, which are bases, a basing pattern, which leads to a new uptrend. So how do I know which is which? Well, again, if this is a little bit of an impulsive move right here, right? So what I want to look for then is what does the first correction look like? If it's more choppy, more sideways, then it's probably going to lead to another move up. It could be that basing pattern. If we get a bearish reversal candle and then it drops sharply, then obviously this is a false breakout and you're heading lower again. It should drop pretty quickly if it's a false breakout. And we'll look at this on Thursday, and if we see anything, or next Tuesday, and I can show you if there's any other indication of what it might be. At that point, I'll comment on it. So overall, though, we're looking at adding a few positions because we think there's a good chance we could break out of this area here. We could wait for the breakout. We could just give it another day and wait. This gets back to how much confirmation do you need or want. If we get in and we get stopped out immediately because it moves back down to the lower part of this range, you could say, all right, if you waited for an extra day of confirmation, you wouldn't have gotten in the trade, so you wouldn't have gotten stopped out. On the other hand, what if we break out, we have a huge explosive move, that 1,000-point move on the Dow? Yeah, I waited for confirmation to be more sure that we were breaking out, but I missed that initial move because I wasn't in it or I'm chasing it. So when people ask me this all the time, what's the right decision? There isn't a right decision. It depends on how you feel. Are you pretty? I just don't believe it's going to hurt me too bad if I'm wrong, because I don't think the market is acting like it wants to really crash right here. At least I'm not seeing it. If it does drop down, I think it'll just drop down into here and then rally back up again and stay within the sideways range. So I'm not worried about taking a little bit of a chance right here. So real quickly here, let's look at our portfolio. I'm in this ECPG. This is my bullish trade. Remember, this is that company that is kind of the largest debt collector. If we are moving towards recession, this company I think could do pretty well. Had a pretty decent strength rank, 96 strength rank. I liked how it was looking like it's coming off of a bottoming formation here. This one still looks good. Now, to hedge it a little bit, I did get, because the market looked like it could possibly drop a little bit, I had that inverse ETF. Now, this is This typically is going to go up when the market goes down. And so this is how we've been making some money with the market going down. Now, this one, it is moving down, which means the ARKK, which is this is the inverse of the ARKK, has been moving up a little bit. But I'm going to hold this because I'm going to add a couple bullish positions. And in case this is a head fake and we drop, I want something there to offset that loss. But if we do break down below this low right here, I'll probably stop out. So I could be stopping out this tomorrow if we break down below this low, especially if the market's clearly breaking out. In other words, what I'm doing here, I want to hold this until I'm sure that the S&P is going to break out of this range. And that might not be clear until tomorrow. Maybe we surge really big into the close, and I might go ahead and stop out of the SARK right now. But I'd like to kind of hold that till tomorrow just to make sure this isn't some sort of false breakout. So what do I want to add? Well, if we go to the watch list here, I told you. Well, first I want to go to the watch list because these are stocks that we're still kind of keeping an eye on and watching. USO, with oil looking like it's getting some strength, I'm going to go ahead and get a trade on USO. I'm going to put my stop down below this low right here. Now, if I would have gotten in this area right here, that's where I would have put my stop right down there, and I would have stopped out on this day probably. But I'm going to have my stop right below here, and we'll see. We'll see what happens. I shouldn't lose very much if I'm wrong, but if it does get back up to these previous highs right here, I have that potential to make about twice as much if I'm right that I would lose if I'm wrong. And that's kind of the expectation that's kind of a minimum expectation with every trade I get into, is I would like to see at least the potential for making twice as much as I would lose. So twice as much if I'm right that I would lose if I'm wrong. Now you could wait for this to go back to a buy signal for additional confirmation. I'm basing this off of what I still think this is a bullish ABC pattern. And we can see this actually, maybe I go to a longer term chart so we can see this a little bit more detail. So here's this move up right here. I'm looking at this as an ABC pattern correcting that move up. There's a lot of support in this area right through here. And we're getting a little bit of a bounce or confirmation out of that. And then, see if it can continue to trend high. See if it at least gets back up here or goes higher. If it keeps going higher, we'll let it go as far as it wants. A lot of this, a bigger move might be predicated on how the dollar moves. But anyway, I like this enough to go ahead and jump in. By the way, with these, I've been getting a lot of questions related to the portfolio lately. Let me go ahead and get in this one real quick, and then I'll address that. 69 is the stop. 100. What if I got to 100 shares? That'd be about a little less than 8,000. I could do 110 shares. I'm going to keep that. I don't want that to be. I try to stay in that 7 to 10,000, 8 to 10,000 range. Let's look at the portfolio at risk. I don't think it's going to be very much. No. 0.82. I want to be below 1.5 on the portfolio at risk, which means that I don't want to lose more than $1,500 if I'm wrong. This would be less than 1,000, so that's good. Go ahead and add that. But I've been getting a lot of questions on the portfolio. The portfolio is not, it's not meant to, see, I've got to be careful because I'm not a financial advisor. I can't give anyone advice. I can't tell you to get into anything that I'm getting into. The purpose of the portfolio is just to show you how to apply some of the different things that we're learning in these classes, ABC patterns, trend analysis, the software itself. When we get into stronger trends, there's a really easy process for finding trades that we'll be talking about. You're looking for a 98 strength rank on a stock that has a nice bullish pattern. Wait for it to go from hold to buy, and get in on the buy signal. Manage it with a trailing stop. There's different trailing stop techniques you can use. There's no perfect way to manage trades. There's no perfect way to run a portfolio. All I'm trying to do is just try to show you how you can apply the things I'm trying to teach you, and then you can see results. I'm not managing this like a real account. This is a paper trade account. This is not a real account. Okay, so I'm checking it. A lot of times I'm checking it at night or something. Oh, I need to stop out of that one. It hit my stop loss. I'm not like, intensely running this portfolio. So just be aware of that this is just for examples, and just show you that if you apply some of these techniques, you can make money, but it's not meant to be an exact portfolio for someone to mirror perfectly or do only the trades that are in that portfolio. That's why when we go through some of these patterns, I'll show you patterns I like, and you can, once you know how to manage your trades or feel comfortable managing your own trades, you can just come into class, especially on Thursdays, and say, okay, what stocks does Jerry like? And then I'll look at those and make a decision on whether I want to trade some of those or what have you. You can use it that way in your running your own portfolio. But I wanted to point that out because, again, although we've done well in that portfolio, you need to understand that I'm not, I'm not, it's not believe me, in that last half hour of the market, and I'm doing my real trades, the last thing I'm going to check is going to be that portfolio. And maybe if I've got 5 minutes left before the market closes, I'll take a look and see how things are and see if I need to stop out of something. But if that is your real money, you're going to be paying attention to that last half hour of what you want to do, what decisions you want to make on those trades. So anyway, hopefully that's clear. It is stated. So, but I want to make sure that there's full disclosure there that it's just supposed to be an example to kind of show you how you can apply some of these skills and how they work. If you learn the skills, I want you to focus on learning the skills, because I assume that's why you're here, and that's what's going to get you the best results in the long run anyway. All right. Let's do another one I like in the list. I've been kind of going back and forth. I want to jump back into some of the defensive stocks. NOC we've been in before, and it's been kind of stuck in the sideways range. But at the very least, I think it can move back up to the upper part of this range. And if I got in today with a stop right below today's low, again, I think I could get that pretty close to that 2-to-1 reward to risk if it just gets back up into here. The other one I'm looking at, and this one has a 90 strength rank, so it's a higher strength rank. The other one was Raytheon, which is also in our watch list here. But it had an 81 strength rank, although it had a nice bullish engulfing pattern. Engulfed yesterday's move, and it's right at support right here. This has a better reward to risk if it gets back up to that previous high. It just has that lower strength rank. So I might go ahead and go with RTX just because of the better reward to risk, and that's a pretty strong move right off of support right there. Let me look at the volume of it real quick. Volume's a little light, but I think if we play it just with the stop, it could be a quick trade. It can come right back down. There's a lot of support right here. If we just put our stop down below here, I don't want it down this low. So maybe I'll use this low right here. So maybe what about 80, 80, 88? 88 would be right, probably right below that. We'll use 88 as a stop. All right, so I'm going to add this. Yeah, I don't want to have it. Again, I want to keep this a little bit closer to 8,000. So what if I did 80 shares? 7,080. Let's do 85. I want to keep that trend, total amount less than 8. Really small portfolio. See, I might only lose $400 if I'm wrong. So we have very little risk here if we're wrong. I just want to have something in case we break out right here. Again, if you look at, we still don't even have half our portfolio. And then maybe I'll add more on Thursday. And that would be, Thursdays where we typically look at more individual stocks. And we'll know more if we're breaking out at that point. Real quickly out of that watch list, I also like Coca-Cola. I talked about this before. Again, you could wait for it to go back to a buy signal for a little bit of confirmation, but I like this pullback right here, and then this looks impulsive. This looks a little bit choppy, a little bit corrective looking. I think this is under consumer staples. And the consumer staples have been doing pretty well lately. And then I also liked this TAC. This is a utility company. If you want to buy, remember I was telling you, I'd probably wait for the breakout. Well, it's breaking out today and giving you a buy signal. So if you want to add some utilities, I'm not, because I'm not a big utility person, but that's a nice little breakout move right there. If you wanted to add that, any sort of utility stock, you could look at that one as see what you think. Not a very high dividend for utility stock, but chart pattern is pretty bullish. And then under the normal approach here, we'll just look under consumer staples. I'll do more of this on Thursday because we'll have a better idea if we're breaking out. But under consumer staples, under the hold section, I like the pattern developing on Blue Apron down here. It's right at that 90 strength range, 89 strength rank there. But I like you've had this decline, and you have a little bit of an impulsive move up, and this looks a little bit choppy coming back down. You're right at about a 50% retracement of that move up. Now I would definitely wait for confirmation, see if this goes back to a buy signal. But that's one that's looking a little bit interesting. Let me look at a longer term chart here. You can see, yeah. So you'll notice that, so through here, look, you had lower highs, these lower highs and lower lows. This was the previous lower high before it went to that lower low right here. So it broke above that. And now look at it, it's pulling back to that right here. If that holds, like I said, it goes back to a buy signal. That'd be very interesting because it could be forming that bowl-shaped move and could be going up the right side of that bowl. By the way, I keep talking about the market to bottom, and I don't think the market has bottomed yet, the indexes. But there are going to be stocks that'll bottom before the market bottoms, and so I'm going to look for some of these like this, like Blue Apron, that I think might be starting to bottom out or look like they're bottoming out. You don't want to load up on them. Like you don't want to jump in and say, oh, all these are bottom. We don't know if they bottom yet. They may look like they're bottoming. We know that some stocks will bottom before the market bottoms. But there's potential there. If this has kind of reached its low, I mean, it's definitely a stock that nobody really wants to touch right now. And there's a lot of stocks like this that had big runs a long time ago, and people kind of forgotten about them. Well, they might bottom sooner, and it'd be nice to have at least one or two that you caught when they bottomed and started to move back up, have them in the portfolio. So I want confirmation on this first, but this is one that we'll keep an eye on. Let's add it to the watch list. All right, that's all I have for now. Let's take just a last peek at the SPY chart. Yeah, we're still kind of right at this area. We'll see how it looks into the close. Like I said, I don't expect it to really move much from here today. But if it does and we break out tomorrow, we should see some of these positions do pretty well in the next couple of days. All right. That's all I got. Have a great week. See you on Thursday for the stock specific class. Bye now.